Okay.
Waiting for Karthik to come in. Jay goes in. Do you just want to check with Karthik?
Yeah. But actually, has he replied to your?
Yeah, he has replied. After that only he sent mail, and again I have sent. Yes, you're calling him, or shall I call him?
Go ahead and call him, Aishwarya.
Sir, he's logging in now. He's doing it.
He's logged in?
He is logging in from a different computer, so he is logging in now. In a minute he'll be.
Okay. Is it?
Yes, sir, he said.
Okay. Promote him.
Promoted.
Hey,
Hi, Karthik. How are you?
excellent. My apologies. I was my devices. I had to swap.
And no stress. In fact,
Hey, just give me 1 second. I'm still having a little bit of audio difficulty. I'm not sure why. Okay, that should be better. Can you hear me?
yeah. Can you mute everybody other than the speakers?
I can hear. I can hear you.
Yeah, good to go.
Good.
Aishwarya, all systems fine?
Yes, sir, all good.
Thanks, Karthik. Dr. Raghavan, please.
Good evening, ladies and gentlemen. We welcome you to the day 4 of the SICCI Extramural web series, edition 3, with MITRAA as the knowledge partner and sponsored by OPG Power, IG3 and Olympia. We are fortunate to have Mr. Karthic Jayaraman, partner and co-head Global Healthcare TPG Capital, and Mr. Sudhir, T.S. Sudhir will be having a conversation with him. May I now request Mr. Ganapathy, President, to kindly deliver the welcome address, please.
Thank you, Doctor. And at the outset, let me welcome all of you into this third edition of our SICCI webinar, which we have been doing with MITRAA as our knowledge partners. We've had various sponsors, but we're very thankful to IG3, Olympia Tech Park, and of course, the sponsor OPG. Let me begin at the beginning. As they say, I'm extremely thankful to Karthik for agreeing to come in and share his thoughts. Karthik will be formally introduced by my friend Mohan Narayan in course of time, but I must give you the context in which I reached out to Karthik to share his knowledge. And you know why he is very knowledgeable when Mohan does the formal introduction. Around the 25th or 26th of March, I spoke to Karthik in UK, and at that time, 21st or 22nd, and that time cricket was very much on the agenda. The EPL was very much on the agenda, and it was a case of now we have it, now we don't. And finally, we had nothing. But we decided to talk about economy for a change. Normally, we never do that. And Karthik and I agreed that the world is getting into a cold start scenario, where he said that whoever comes out first is going to be bouncing. At this time, as we approach 1 July, we are still seeing still not seeing anybody bouncing, except perhaps one country. And India is still lagging behind because come at the news today that Maharashtra has extended its lockdown till 31st of July. That's your financial capital. That ain't great news. And we decided to talk about two things. One was about the countries that could get affected and the manner in which they could get affected, and therefore the people, how they could get affected. And one of the things that I always felt coming out of this could be that the world and the people will go into what we famously or infamously call the hourglass syndrome. The poor getting poorer, the rich getting richer, the middle class getting stuck in between the glass and getting squeezed. And to stay relevant and float, they could take on a lot of debt beyond perhaps at times the repaying capability and slowly sink into the bottom end of the glass. So it is in this context that I thought I'll ask Karthik to give a macro perspective of what can happen to the global economy and what can happen to the people and how difficult it is going to be for several people to sustain and come out of this crisis. With this opening statement, I now invite my good friend Mohan Narayan to formally introduce Karthic Jayaraman, arguably one of the sharpest brains in the market today. Thanks, Karthik, and over to you, Mohan.
Thank you, Ganapathy. Good evening to all of you. And Karthik, welcome to this session today. My real pleasure in introducing you. I was reading through your profile and I am taking the risk of doing the introduction absolutely extempo. So Karthic Jayaraman is the head of, he has recently joined as a head of TPG Capital, the private equity arm of the alternate investment TPG. He is based out of London and he has joined them a month ago, where he has a responsibility of all their healthcare investments and very important in the current scheme of things, and also co-heads their healthcare business platform. Prior to TPG, he had a very long stint, 20 years at Carlyle Capital, where his recent assignment was their MD and partner. And of course, prior to Carlyle, he started his investment journey with Credit Suisse Capital. And very interestingly, prior to Credit Suisse, looks like he has a very humble beginning, being a field engineer at nothing less than Schlumberger. And by education, which is still NVS, he has an MBA from Harvard University and an engineering degree from University of Sydney in Australia. Of course, it's a real pleasure, and just introducing you, Karthik, gives me a lot of rub-off effect, I'm sure. And extremely pleased to have you with us today. And the topic is very intriguing, as Ganpati said, the hourglass syndrome. I'm not going to venture into it, but to venture into it, we have nobody other than our own TS Sudhir, our noted, is now a household name with SICCI. But just to go through the formality of giving a one-line introduction about him, very noted print, media, TV, and then digital journalist. The journalist with a lot of brains. So to take Karthik on the coffee table conversation on a virtual platform, over to you, Sudhir.
Thank you very much, Mr. Mohan. Both Mr. Mohan and Mr. Ganapati have kind of set the ball rolling. And of course, we would look forward to hearing from Karthik. A very, very brief interjection out here. And just to kind of put it in the context of today's news. Just a few hours ago, Karnataka's Revenue Minister, R. Ashoka, said something very important. He said, in the light of the increasing numbers in the Silicon Valley of India, Bengaluru, and the fact that the medical experts have indicated that the numbers could spike in the months of July and August, he said doctors must be mentally and physically prepared to work on COVID for the next 6 months. So he has kind of indicated till the end of 2020, COVID-19 is going to be the focus for the medical fraternity. So the prognosis is not really looking good for many urban centers in India. We referred to Mumbai just a while ago, Mr. Ganapati, the lockdown has been extended till the 31st. Bengaluru is going to go for a Sunday lockdown over July. Chennai is in the midst of a lockdown. Hyderabad is looking at a 15-day lockdown. So you are looking at all the growth centers in India, almost in a sense of under siege. I would kind of look forward to hearing from Karthik also on what does this lockdown and unlockdown does to the economy of a developing country like India, and of course also enlighten us on what's really happening in the West, which has gone through the lockdown phase and now has been pretty much unlocking. And also, in fact, in the afternoon, I was having a chat with Mr. Ganapati, and we spoke about Charles Darwin's theory of survival of the fittest. And I wonder, in light of the increasing costs of medical resources and the stress on medical infrastructure, would it be in 2020 a case of survival of the richest? So we look forward to hearing from you, Karthik. Over to you. Thank you.
Thank you, everyone, for having me on board. Firstly, I hope everybody is well, your families are well, and your friends are well under the circumstances. They're definitely testing times. Also appreciate having me on board to share a few of my own thoughts. It's always a privilege to be sharing the forum with great minds like yours. So I humbly accept the invitation as well. Very kind words. I wish I could say most of them were true, but apart from the factual parts, they're probably been painting me in much kinder light than otherwise. But thank you again for those kind words. Maybe so I could start off with maybe just a few words on what I think about the topic, and then maybe we can just bounce back and forth on a few of these ideas. I'd say when we started talking about it, I mean, this is a topic that it's increasingly becoming a more and more important topic in business conversations and in policy conversations everywhere. And we can speak also a little bit about how COVID, what impact COVID is going to have on it. But the hourglass economy, or as sometimes it's also referred to, the job polarization effect, it's sort of not just a COVID-induced phenomenon. It's been happening. Maybe COVID has just brought a lens to it in a much sharper focus. But the hourglass economy and the job polarization effect have been discussed in economic theory and business practice for, I'd say, almost close to 2 to 3 decades now, especially in Europe and in the US and the OECD economies. A large part of what I will probably refer to in today's discussion is my own experience from the US and Europe, and the data from OECD markets, apart from, and I'll specifically talk about a few things in the emerging markets. But I think the same concepts and principles apply to most economies. I think these are structural things we're seeing globally, just to, plays out at different levels in the different economies. And I think this is as I mentioned, the hourglass effect or the job polarization effect is an increasing part of the conversation, because as businesses become more acutely aware of various stakeholders, whether it is their own workforce, whether it's the government policy regulators, whether it's the shareholders, the management teams, customers, suppliers, I think this is, being sensitive to addressing the issues for all of those constituents is becoming an important aspect. So something like job polarization does impact at various different levels. And we as, investors in businesses, but also sitting on boards, interacting with policy regulators, we need to be a lot more aware. Maybe just a few more words to level set. I mean, the way I think about it is, obviously everybody talks about income inequality and wealth inequality in most markets. And I think that's a very important topic, a very important social issue, which has political implications as well that we all need to address. But job polarization is maybe the other side of that coin, whereas Karthik pointed out in the beginning, where we're seeing the middle class getting squeezed a lot more. Yes, economic growth has lifted a great many number of people out of poverty, and we shouldn't roll back any of the measures we have taken over the last 2 or 3 decades in economic liberalization. But I think at the same time, we need to come back and address some of its shortcomings and say, look, where is it that it's fallen short? What is it that we haven't addressed here? Why is it that we, despite the apparent progress we've made overall as an economy, has it really applied to everyone, and has everyone really benefited from it? So maybe just to dwell a little bit more into it, and to set the playing field to start with, as Karthik was mentioning, economic activity, obviously a ton of wealth creation over the last 20, 30 years. Touch wood, we've had a lot of wars, but we haven't had major wars. There's been generally, I'd say, most of the large democracies have been stable, which has really resulted in a great level of economic growth, and a number of people have benefited from it. If you begin to look at the data, and with job polarization, you tend to tier the population into economic subgroups. What you are clearly seeing is the wealthy at the top are definitely growing at a much faster rate than the rest of the economy. At the lower tiers in the economy, you do have a number of people being lifted out of poverty, and that's very good news, and I think we should continue to do that. But the middle bucket has largely stayed stagnant in terms of real wage growth. And we need to discuss, and we need to bring to home why that's happening and what we can do to address it, because I don't think it's something we can ignore it, because it has real world implications socially, politically, economically, for the long-term sustainability of the capital model that we currently are looking at. And so why is it that you have this tiering of the economic layers, and where does it play out? I think a number of different factors. I think especially in the West, in the OECD markets, what we're beginning to see is an emergence of what's clearly a knowledge economy, right? I mean, what's being really driven by innovation, whether it's in technology businesses, whether it's in healthcare, or general industries. I think you're seeing the emergence of the knowledge economy. And the knowledge economy has its own implications from a capitalism point of view, but it generally tends to create a concentration of wealth and income in the hands of the few who have who have developed the knowledge and created it. So that's the clear path. I think on the other side, what you're seeing is on the lower levels in the economic stratification, there has been a shift, at least in the OECD economies, from a manufacturing economy into a service economy. That transition is, I'd say, is ongoing. I mean, it brings, I'm sure we'll be talking about this later, but from a current COVID crisis point of view, that may cause some shifts back and forth. Some countries may emerge as winners, some may emerge losing ground on it. But overall, what we've seen in the West over the last 20 to 30 years is obviously a shift from a manufacturing to a service economy. And the service economy, people have benefited and they have certainly moved up. And there's still people being lifted out of poverty. There has been wage growth in the lower I'd say there's data showing that there has been wage growth in the lower tiers of the economy for people, but the middle there has been an increasing stagnation. And why is that? I think we can attribute it to a couple of different factors. One is a lot of the manufacturing jobs, which were routine in nature, or what I would call the middle office jobs, which were routine in nature, have been displaced either by technology or by globalization into other markets. And that has caused an increase. The increase in productivity has meant that there has been a larger pool of middle skilled workers who are being displaced from the economy because their jobs are no longer relevant in the economy, or they're being shifted. So everybody knows about the globalization, where you have some manufacturing jobs which are just being displaced from OECD economies into the developing economies, right? Because these are routine work, can be done in cheaper economies with cheaper labor costs. But you're also seeing that in the service economy. I mean, to use a really simple example, which all of us can relate to, used to be you probably, 10, 20 years ago, 20 years ago, I'd say probably there was one assistant for every manager or every 2 or 3 managers. Today, a large part of the job is completely automated, whether it's booking appointments, taking messages, you get your voicemail on this, you get your message on this, your email, you set up appointments, it goes online automatically. So really basic things that we used to require people to do are no longer required because technology enables us to do them in a much more seamless and efficient manner, which means the productivity of that person is increasing. That's great. But what was previously a job for 3 or 4 people is now becoming a job for 1 person. So that is creating a level of unemployment, which is keeping a pressure on the wage growth. But that's what's creating the hourglass syndrome. I think the experience in the emerging markets is somewhat similar as well, at least based anecdotally on what I've seen. It's very similar, although the data is still not as robust in the emerging markets, but I think you do see that as well in the emerging markets. I think what's masking it in the emerging markets, at least in the recent period, has been that because there has been the globalization impact, economies in China and India have benefited in that a large number of people have been lifted out of the lower tiers of the economy. But even there, you're beginning to see the stresses on it and beginning to see, okay, are we creating enough jobs in the middle class range to be able to continue to push people, or are they effectively hitting a ceiling very quickly and staying stagnant? So this stratification in the economy is very real. It's clearly, there's a lot of data in the OECD markets. I think it's also beginning to see in the emerging markets. And we as business people and people who also interact on the policy side of things need to think through it, because that has a lot of implications for what we do on a business on a day-to-day basis and how we run it, but also how regulators, business and policymakers will actually begin to look at it. and what we need to do to address it, because structurally this can lead into a lot of places where we don't want to go. And I think the more we're proactive about it, the better it'll be. So let me just pause there. I think, look, all of these in the midst of COVID has definitely magnified the issue. I mean, I was looking at some alarming data from the Asian Development Bank. I think it was saying something to the tune of, unfortunately, because of what we've seen in the COVID crisis, about potentially between 90 to 400 million people may slip below the poverty line again. So those are numbers which are just mind-boggling when you think about it. Those are entire countries of people and entire societies and families that are impacted by it. So we need to think about how do we revive economies, how do we bring them back so that these people can get back to a path of growth as soon as possible. So let me just pause there with my opening comments. I'm happy to elaborate on anything or also answer any questions so we can take it forward.
Sure, Karthik, lots of talking points out there in your opening remarks. I'll start by asking you, you alluded a lot to how the middle class was getting squeezed. I want to understand from you, and this middle class can actually be in London, in UK where you are, it could be in India, it could be in China, it could be in the USA. How aware is the middle class of this reality that they are getting squeezed, that they are kind of getting stagnated? And how are they likely to react in the coming months, years?
Well, I'd say at least in Europe and the US, I think there is definitely an increased level of awareness that the economic growth, apart from having the economic growth from has benefited a few, so that's why you have a lot of talk about income inequality. But I think the middle class is also acutely aware that they have been pinched, and they may not everybody may look at data every single day. Not everybody is an economist studying this on a day-to-day basis or producing reports via NPER, but you see it in the polls, right? It's increasingly shaping up political discussion in the US and in Europe, which is why people are beginning to say, look, have I really benefited from conservative policies or liberal policies in the last 20 years? You're also beginning to see this in discussions around universal income, around minimum wage, which has been going up in the OECD markets, with the hope that that pushes everybody up, right? So we've tried the economy is growing and it all flows down from the top. Now we're going to try the economic policy of improving minimum wage, that everything will shift up. But I don't think that's necessarily enough, in my opinion, to deal with it. But to answer your question, you're definitely seeing it. And you can see it in the polls. You can see it in how populist economies are developing, populist parties are developing, and the political conversation is definitely dealing with this.
So when you have slogans like America First, like Atmanirbhar in India, do you see them as in any way steps to protect this middle class, or is the middle class basically left to fend for itself by the political leadership?
I think we need to be, I think these statements, without getting into the politics of it, are definitely a reaction to addressing a genuine concern and fear in the middle class about that they're being left behind, right? No matter what happens, economic cycles up and down, house prices keep going up, they're not able to keep up, mortgage cycles go boom and bust, they're not able to pay the mortgages. I mean, we're not even talking about people below the poverty line. We're talking about people who are making $40,000, $50,000 in the US or 40,000 euros in Europe, not being able to keep up with their mortgages or not being able to afford private schools and crumbling infrastructure as well. So I think these political slogans are definitely a reaction to it. But if you look at what's being done from a policy point of view, right? I mean, which is where you go to is it really solving it? I would say we're still lagging behind, right? Because the fundamental issues that we need to address to solve this, whether it is through revitalizing economies through infrastructure investment, or to invest so that the middle class can also participate in a knowledge economy, those things are not happening at the same speed. So yes, the slogans are in response to these concerns, but are the policies responding? I would say we still have a little bit of catch-up work to do.
Right. You mentioned that COVID has, in a sense, accelerated this entire situation at this time, and even without COVID, probably things would have come to such a pass. How how much has COVID actually accelerated this by? Otherwise, it would have come by, say, 2025, 2030. What is your guess?
Yeah, look, I don't have an exact figure on it, but I just go back to the reference. Both the OECD and the ADB have put out some reports lately, which is it's a little bit scary reading when you imagine the amount of economic impact this COVID has had. But in terms of human scale, population scale, we're talking about a good 90 to 300 million, 400 million people who have slipped back into the poverty line as a result of it. So you can imagine if that's been the shift, and I know the poverty line is different in different countries, it's arbitrarily defined, so it's a little bit difficult to use that as a barometer, but just still using it as a data point, you're talking about a good 20-30% of the working population in many of these countries which are being impacted by it. Now, the way I would say it's why you can't really look at it and say, has it really accelerated? Is 2025 just being dropped forward to 2020? The problem is it's a perpetual curve which has been going for 20, 30 years. And so do I know that it would have come to a head in 2025? No, I don't. Could it have been could it have been prolonged into 2030 or 2035? Potentially, because if we don't address it, the trouble with slower curves is you really don't realize. It's a little bit like boiling the frog. You don't realize it until it's too late. That's what's been happening in the economy. I think what the COVID crisis has done is really brought it acutely in focus. And I think that's why governments have taken some extraordinary measures to push off that pain point to a day, at least in the OECD economies, again, although the emerging markets don't have the capacity to deal with it. In the OECD markets, the governments are exactly doing what they need to do to push off that reckoning, because they know if they don't, the amount of pain is going to be too significant for them to politically manage.
Right. One of the features of this entire battle against COVID has been lockdowns. Now in India, we see the lockdowns as having been very, very intense. Perhaps it's not the case in many other countries. Like I mentioned the examples at the beginning in Bengaluru, Hyderabad, Mumbai, it has been fairly intense and it has had a crippling effect on the economy. And most industries, including those on this program, would say that we do not want another lockdown. On the other hand, you have someone like US President Trump, who seems to be an anti-lockdown kind of a person. Is this basically a gamble that different political governments are taking in different parts of the world? Some are going in for lockdown as a way, some are not. It's basically, they don't know, they're just groping in the dark, and it's a gamble.
Yeah, so let's separate out three parts of this, right? There are three underlying questions. One is what's happening from a basic health population management point of view, what's happening from an economic point of view, and three, what's happening politically, right? And these three things form a triangle, and at any one given point in time, we have to play around with it, and each decision on one of them has an impact on the other two nodes as well. So if you just look at it purely from a population health dynamic point of view, different countries, COVID hit different countries at different points in time. So it's somewhat also difficult to compare them because some of them had the benefit of learning from the others. Italy, unfortunately, was unfortunate that it was one of the first countries in Europe to be hit with COVID patients coming in from overseas and then slowly beginning to spread out in communities in northern Italy. Now, the others had the benefit of learning from it, and our medical understanding has improved. It's not complete by any stretch of the imagination, but what we have seen say, for example, in a place like Germany, is how rapid testing and a genuine lockdown. And when I say lockdown, it's just not staying at home, because people do still go out. It's things like wearing masks, maintaining social distance, how many people are allowed to gather, who's allowed to gather, how do you protect the vulnerable, all those measures. So the lockdown is a very simplistic word we're using to describe a whole host of activities that we need to manage in an economy to prevent the spread of the spread of the virus. So Germany it's a poster child. I mean, yes, you have Korea's done a good job, Japan's done a good job, Singapore has done a good job, etc. But Germany, at least nearby here, is a large economy which is being largely able to manage through it. And why have they been able to do it? Well, because they locked down early, they tested heavily, and they were able to properly follow lockdown procedures. Now, various countries have chosen to take different measures on the lockdown. Now we go into what can happen, why they have been able to do that. And that's because economically, some countries have been able to manage that lockdown a lot better, right? If you really want to isolate an economy for 3 months and really lock it down and have no activity, you need to give people enough support to be able to say, look, when we come out of this, we're keeping you afloat, we're providing you with a liquidity line, but we can keep going on the other side when the economy restarts, which is the cold start concept that Karthic and I were talking about earlier. Whereas some economies have said, look, we don't think we can fund it that long, so we need to keep the economy warm. So we're going to take something from a healthcare point of view, but we are going to continue to keep it going. And finally, there are some countries which have just taken to say, look, we know there is economic pain. We're not going to choose to do any economic pain because we think that the impact and the loss of lives, bluntly said, as tragic as it is something we can manage through because we have a healthcare system and a hospital system that can deal with it. Now, that's a political calculation as well, because you need to be able to sell that to your people and say that this, we are going to go through a lot of pain, and we're going to live with that pain because we as a society have chosen that. Sweden is doing that, and a few other select countries are doing that. But that's the political conversation, implied political conversation they've had. So just going back to your question, the lockdown has been enacted at different points by different people because it's a trade-off between what you believe you can do from a health point of view, what you believe you can do economically, and what you think you can push through politically.
Right. A lot has been happening between India and China and various other countries also looking at alternatives to China because of whatever has happened in the last 6 odd months. How are countries in Europe looking at China? Is it different from the way an India or a USA is looking at China?
I would say relative to the US, I mean, if you look at it, I would say the rhetoric in Europe is a little bit more subdued. But that's generally because Europe tends to try to develop a consensus view across 27 different countries. So you have to manage the political rhetoric a little bit more. And Europe has, even before this, they've had a lot of internal issues, Brexit, Italy, Spain, the changes in the social political structures over there, they've had to deal with it. So they've been largely inwardly focused. But the conversation with China, I don't think is that much different. They're thinking about the same topics. If you hear about some of the things that have been happening in the UK on 5G, you can hear the echoes of what's happening in the US. In terms of how they're approaching it, I think they're definitely looking at it saying, look, we need to rethink our supply chain. We need to rethink our relationship here. Because there is some sense that there has been a breakdown in some level of communication, which could have definitely been improved, which could have maybe helped avoid the scale of the human tragedy, at least to some extent. So there is definitely a political voice that says, look, we need to re-examine this relationship. Now, how far that will go, I think comes back again to a question of politics and whether people will be able to push through. And the other part of it is, what is the alternative, right? What is the alternative? Are we really going to recreate an entire manufacturing base and bring it back to the UK. Do we want to do that? Or have we gotten to a point where we're saying, look, we're not interested in those 20,000, 30,000 pound jobs up in, in the Midlands or in the North. We want knowledge economy jobs in the North as well. So that's a little bit of the political discussion that politicians need to have, is what are they going to do? Or even if they choose to displace manufacturing from China, where are they going to move it to? Where do you have infrastructure, scale, labor capacity, education, technology know-how to be able to replace that? And I think you're beginning to look at things like, Vietnam, India as alternatives. These were already emerging as alternatives. Yeah. Now the question is, can these countries respond to the challenge and say, yeah, you know what, we're going to put our hand out and step up for the challenge? But that conversation is definitely taking place as we speak at the moment. I think in some industries, it will definitely happen. Pharmaceuticals, medical devices. I think those are natural places coming out of the COVID. Sensitive topics like aerospace, defense, I think you'll begin to see that. But do I expect it to be broad-based? No, because that requires an all-out rebalancing of trade. And I don't think anybody really has the stomach to go back 20 years in terms of trade balancing.
Right. Just to take off from your question, Dr. Raghavan of SICCI also has a similar question as to what's the impact of what all you just now said. What impact could it have on Indo-UK trade relations? Could that undergo a change if India is really looked at as a serious alternative to China?
Yeah. I'll choose my words more carefully here since I sit in London. I think it is definitely an opportunity for India, but I think it is of greater importance in the UK. What do I mean by that? Just a few anecdotal data points. I think about 20, 30 years ago, the UK was India's second or third largest trading partner. And although trade has grown, the bilateral trade has grown, I think UK now ranks somewhere between 15 and 20. I think 17 was the last number I was able to pull out of trading partners. So the relative importance of UK to Indian trade has declined. Having said that, on the other hand, India is one of the largest investors in the UK, whether it's Tata or some of the other multinationals who invest in the UK. So there is definitely an opportunity to improve that relationship. I think the UK will move to secure it because they will need to secure large export markets for UK goods. Question is, what can India get in return, and where can they really step up that number back up from 17 into a higher number, into a higher place on the trade? I think they will look at it. A couple of other data. China, though, has moved up in the meanwhile, so I think the UK will definitely look to India as an alternative. Another couple of data points. I think India used to send something close to like 20,000 students. I mean, it was about 10,000 about 20 years ago, probably 20,000 to UK universities. But if you look at it in the last 5 years, that number has actually declined or is going down. And Brexit does pose an uncomfortable question and because there were some elements of the Brexit which touched on sensitive topics like immigration and national composition, which did touch on a few sensitive topics, and the question therefore does come to bear, which is how open is the UK government? But I think that they will, out of necessity, take the right steps towards addressing that. So you will see pushback. Having said all of that, the one caution I will point out is I'm not aware if India has actually signed bilateral trade agreement with any of the European economies or any of the large markets. I think bilateral trade agreements are incredibly difficult to enforce, especially for a complex economy like India on one side. So yes, UK needs to. I think UK will benefit from it. India will also benefit from it. But whether it can actually be done is going to be much more challenging.
Okay.
I'm still on. I don't know if
Yes,
Sudhir might have.
Sudhir, we don't hear you.
Can you hear me now?
Yeah,
Yeah,
now
we can.
Yeah, sorry. Mr. Ravichandra Babu has this question taking off from the data point that you mentioned about the students. Whether this COVID crisis will change the structure in the education system globally, and whether this will affect the quality of the students who are coming out. And how would the job market perceive these students?
Yeah, look, I think it's early stages to say whether there has been a structural impact on the students coming out of universities and colleges and having a teenage son who's moving schools. I hope it hasn't impacted his education level, but putting that aside, I think there will be structural changes in how education is managed. I think a lot of the universities have moved to online campuses, and they are beginning to rethink what needs to be taught on campus and what needs to be discussed on campus. Having said that, in a perverse way, it's also opened up some good education to a number of people who historically may not been able to have afforded to be able to go on campus. So I think this is going to cut both ways. I think, yes, there is going to be some dilution of what the educational experience has meant from being on campus. On the other hand, it's also going to open up a broader set of people who are able to participate in top-tier educational institutions. So I think we need to look at it in both ways. Structurally, where that comes out, I don't have a strong opinion on it at this point in time. I certainly hope we'll use this opportunity to bring more people the education that they deserve. And, going back to where we started the conversation in terms of an hourglass effect, the only way to get out of the hourglass effect is to create a knowledge economy and move more people from the tiers up. So the more people we can move up the education ladder, the better, the faster it will be, the better it will be for all of us.
Right. With the loss of jobs in this COVID season leading to rise in unemployment, the purchasing power of people has obviously declined. So Mr. Anand wants to know, how would the service economy really bounce back in this kind of a situation?
Look, that is it's a great question that we're all trying to think through in real time. And unfortunately, we don't have the data at this point in time. What we do know is there has been an incredible amount of demand destruction in the last 3 months. By any measure, it's between 5 to 10% of the large economies and potentially even larger. But even at a 5 to 10% demand destruction, that is multi-years of growth that are being taken away. Now, how will we bounce back out of this? And this goes back to an earlier question that you had asked, is how will we respond? Now, if you look at the policy response of different countries, they've been, depending on where they come from, they've been able to respond to it differently. What do I mean by that? In the OECD, whether it's the US or in the UK or in any of you or even in Australia and New Zealand, governments have been able to support the people directly, whether it is through direct checks in the US or through furlough schemes in the UK or job support, in Germany and France. What the governments have basically done is they've quasi-nationalized the corporate workforce and said, look, we know there is demand destruction going on, but we're going to minimize the amount of demand destruction by pumping in this amount of money into the economy. One of the perverse things that's actually happened is because of such a fear, the move to safe assets has meant that government's borrowing costs have actually not gone up. You would think intrinsically with this amount of borrowing, and some economies are, putting in as much as 10-15% of their GDP back through fiscal and monetary surplus, depending on where you are. But their borrowing cost hasn't gone up, because even though the amount of debt has gone up, because of the rush to safe assets, the interest rates have actually gone down for government borrowed debt. So net, they're actually coming out in the same place. Now, what happens long term? I think that's a fair question, and we have to think through whether inflationary forces will reemerge and cause a significant amount of issue for subsequent refinancing. But putting that aside, in the short term at least, they have dealt with the demand destruction by putting in that money so that when the economy slowly emerges from lockdown, people still have the financial capacity to re-engage, and it's not a cold start to the economy, but rather a warm start to the economy. You can do that when you have reserve currencies like the euro or the dollar, and you can actually do that, and you have healthy balance sheets. But what do you do if you are India, or if you're Indonesia, or one of these other countries who is still an emerging market, developing country, where your balance sheet is still strengthening, but it's not strong enough, where you can go out and put 10-15% of your GDP back in as fiscal stimulus? I think that's the real challenge, is what is the right amount to put in so that your economy doesn't completely seize up and you can actually release it without completely upsetting the external forces. Now, that then goes, for policymakers, goes back to how exposed is my economy, how dollarized is my economy, how much can I really run fiscal deficit over here, and what are the structural changes do I need to do so that whatever pain I'm going to take in terms of additional debt and pumping money back into the economy, I can offset it very quickly with some improved productivity gains, which will allow me to sort of catch up and pay off that debt again. So that's the difficult calculation that finance ministers in most of the emerging markets have to deal with.
Two quick questions. One, you mentioned about a large number of jobs in the manufacturing sector having been lost. Obviously, now in order to create those jobs again, you need investment. So where is that kind of investment going to come from? Does the private sector have the financial muscle to put in that investment, or do you see the governments doing it, or is it essentially some kind of a chicken and egg situation? Which comes first?
Yeah, so let's take it in different levels. I think if you ask the OECD economies, I think it will take a little while longer for corporates to actually go in and build out that investment and that infrastructure. The reason is we have just gone through a period of incredible demand destruction. So adding supply doesn't necessarily solve anything. If anything, you need to go back to creating the demand first before you can create, the need and supply. We were already in a deflationary period for a very long period of time. This demand destruction hasn't destroyed any supply. It's actually just destroyed the demand side of the equation. So putting in more supply into capital investments, I don't know if it's necessarily going to solve anything in the Western economies and OECD markets. They may need to do some of it, going back to your earlier question on, will some of the manufacturing be brought onshore again? But from a macroeconomic point of view, maybe I'm missing something, but I don't see the immediate need for creating more investments. Now, on the other hand, for some markets like India or Vietnam, they may want to take advantage of the fact that there is probably going to be a reorientation of the supply chain from some geographies into other geographies. So where does that capital come from? Now, historically, the trouble is going to be the countries are going to have to create greater incentives for foreign capital to come in to invest directly into those sectors. Because in an environment like this, you can imagine sitting in a boardroom, it's going to be a fairly challenging prospect for a board to sign off on a large capital investment project in XYZ geography that they haven't traditionally invested in, to say, okay, we're going to recreate a manufacturing plant because we've got one over here, we need to move it to another place. But sure, let's sign off on whether it's a 100 million, 200 million project. I think the bar is just higher. But to facilitate that, those countries are going to just have to do a little bit more in terms of infrastructure support and making policy, whether it's tax or regulation, much more favorable for those countries to invest in. So whether that's removing caps on foreign direct investment or being able to repatriate, providing IP protection and things like that, they're going to have to create that environment. So I think it will be led by the private sector, but equally the public sector needs to step up in terms of policy reform to enable the private sector to step into those emerging markets.
Yes.
Sudhir, we don't hear you. Sudhir? sir, his line seems to have gone. Can you please take over?
Karthik, here is a healthcare question for you. So where is your PE head? What shifts do you see for natural ingredient businesses that offer proprietary science to brands and type of clothes? Do certain attributes make these more attractive in the current scenario on a 3 to 5 year horizon? This question is from Krishna Srikanth.
Yeah, look, I think people's general awareness in this environment has gone up. And if you, unfortunately, if there are no silver linings in this human tragedy, right? But if I may even risk using it as a precautionary tale, the virus has affected the more vulnerable parts of the population, especially people with comorbidities. So if anything, there is an increased consciousness to say, look, you need to take care of your health, not only because it's the right thing to do, but because when things like these viruses hit, causes like diabetes, hypertension, or all of those other diseases are actually risk factors, genuine risk factors for you. So I think that drive in increased awareness for health and wellness will see a rise in demand. And therefore, I do think that investments in health wellness concepts on the pharmaceutical and nutraceutical side will make a difference going forward. That shift was already taking place, but it will definitely accelerate through this crisis. You can already see that in a number of. If you look at what sells and what doesn't sell on your retailer shelves, you know that that's actually already taking place.
Right. Apologies for getting disconnected. So thank you very much, Karthik, for a very candid conversation, and you didn't duck any question, including the one which concerned the Indo-UK trade relations. May I now request Mr. Ashokan Krishnamurthy, MD of MITRAA Group, to deliver the vote of thanks.
Good evening, friends. Just to lighten the mood a little bit, in the happier times, let's say maybe 6 months, a year back, the term hourglass, we would have conjured up a different concept, different perspective, let's say an hourglass figure. But in these troubled times which we are facing today, where the economy is taking a battering, I think that is the last thing in the people's mind. The address by Mr. Karthik, especially regarding the stratification of the economy, the population, relative to the hourglass, has been absolutely enlightening. And as Mr. Sudhir has just put in, it was absolutely clearly and lucidly put. Thank you, Mr. Karthik, for sparing your time, sharing your thoughts, and also fielding the questions put in by the participants. Thank you very much. Southern India Chamber of Commerce and MITRAA Foundation, thank you very much for sponsoring this. We had started off with 2 series, and after the success of the 3rd series, after these 2 series, we decided that we'd go in for the 3rd one, and this is also shaping up very well. Thank you very much to SICCI, Mr. Ganapati, Dr. Raghavan, Aishwarya, specifically for taking care of all the background work as well as the front end. A very, very big thanks to our sponsors, the OPJ Group, IG3, and Olympia Group, without whose support this series would have been a non-starter. And finally, what do I say for Mr. Sudhir? He has been anchoring these shows close to about 14 or 15, which we have had so far. And as usual, he has been at his absolute best. Thank you, Mr. Sudhir, for being such a good co-host and more importantly, an anchor. And finally, a big thanks to all the participants who took part in this today's session and for putting up the questions. An apology from my side for the minor glitches which took place during the course of the session. something which was unavoidable, but we hope to be more careful in the future sessions. Just a reminder, tomorrow again we are having the next session, same time, same link. Tomorrow it's going to be on leadership in these COVID times. The speaker is going to be Ms. Sagarika Ghosh, journalist, news anchor, columnist, and author. So please do join us tomorrow at the same time, same link. Stay safe, stay healthy. Thank you very much. Over to you, Sudhir.
Thank you very much, Mr. Ashok Krishnamurthy. Thank you very much, Karthik.
Hi, folks. Stay safe, all of you. Good night.
Thank you.